and a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. No shop with my toys. Now, I might have a lot of toys on my desk, and I do clown around, but I am a trader. And I'd like to think I'm a reasonably good trader. And today's video is a little bit about who I am and where I came from, in the form of an interview that I have recently done with a prop fund called the 5%ers. Now, if anybody's followed my journey, you'll know that I trade for the 5%ers, and the cumulative pots that I trained is well in excess of over 200,000. Now, this is also a little thank you and a salute to the guys of the Scruffy squad, but mainly to Volker. And I genuinely mean that, because it was Volker that got me involved with the 5%ers. And here we are, sort of nearly a year into it, and it is generating good funds. So if you enjoy the interview and you want to be part of the 5%ers, they've been kind enough to give me a discount link, which you'll find in the description below, and you'll get 5% off the fees to buy into the fund. But from my personal point of view, it is a very cheap way into market, and you have a lot of backup to sort of get you to the profitability that I guess you want to be at. So please enjoy the interview, subscribe to the channel, and if you've got any questions, I'm easy found. Drop them in the comments or check the description, you'll find all my contact details. Enjoy the video.
Well, we're waiting.
Fantastic. So guys, today I'm joined with Gary. He's one of our oldest traders at the Fivers. Collectively, he's traded and managed just over $200,000 with us in the past. And we're happy to have you here, Gary. Thank you for being
welcome to be here. Thanks for having me.
Fantastic. Can you tell us, Gary, a little bit about your background, a little bit about yourself? Is that okay?
Obviously, my name is Gary. A lot of people call me Langers, which is a derivative of my second name. I've had that since I was 10-year-old, so don't get worried if I refer to it as Langers. I live in Durham, the UK, in my 50s. I'm old. I'm not hip and trendy like you boys. And I've been around the markets over 15 years. And they kind of fascinate me. I came to them by accident, to be honest, which is a strange way to look at it, because I didn't wake up one day and think, I'm going to be a trader. I genuinely didn't. I became a trader kind of through necessity, I guess is the way to call it. I was in a meeting for a business that I had. I ran a multi-million mail order business for well over 15 years. And as that business grew, we needed to buy products in far off lands. Now, at the time, I just used a distributor, didn't really get it. And I used to always try and get the price down, all that sort of thing. And I had a guy work for me who was an ex-commercial bank manager, and we were in a meeting. And me being me, trying to get the price down. The guy I was dealing with says, I can't do it because the exchange rate's rubbish. To me, it was like, what are you talking about? I just want to buy a container of goods. You know, the more I buy, the better price. And then he explained that he buys US dollars and he sits on them, and then he'll buy it in their domestic currency, which is the yen, if you're getting a container from Japan sort of thing. And Jim popped up, who was the guy who worked for me. Says, oh, you must do forward purchasing. To me, I never heard of it. And basically, it's just buying currency, sitting on it at a good price, and then using that good price against another currency when the two balance out. And I did a deal where I got a discount based on the exchange rate. And that sparked up my interest. Now, as the business grew, Jim kind of coached me and taught me all about forward purchasing. And we started doing it ourselves because we started importing direct from manufacturers rather than distributors. And then through time, those currency exchanges made us quite a bit of money. And then when the factory shut down, I just carried it on. And well, for the last 5 years, it's earned me a living. So it's kind of a strange way of coming into it, but
it's an interesting way. It's a very interesting. Normally I speak to a lot of traders that have come through, you know, they've seen stuff on YouTube, or their friends have been trading Forex, or they've been trading different types of assets, cryptocurrencies, indices, things like that. But for you to come through the real world kind of, you know, currency exchanges and doing it through that, that's it's an interesting entry into trading. And were you profitable straight away? Did you find yourself?
God, no.
No.
When we were doing it for the factory, it wasn't so bad.
Yeah.
Because you were sitting on sort of, we would buy X amount of dollars, and it would sit in a bank wallet. It'd be there for quite a long time. You could ride it out. But you sort of start trading yourself personally. And so with having a company behind me, you think you're master of the universe and you do what you like. And I made every mistake under the sun because I thought I was better than the markets. You know, you just think, well, I'm MD of a company. I know what I'm doing, obviously.
Yeah.
In we go. Jim would be on the other side of the office, laughing his head off, going, "You're an idiot." And he used to let me burn my fingers. And it took me a good 18 months to get my head around the fact that the markets is better than what I am.
When you say burn your fingers, for a lot of people that don't know what that means, what would be burn your
fingers? Get it wrong. Sorry, I do come from Durham in the north, and I talk a strange way sometimes. If you burn your fingers, you get it wrong. And boy, did I get it wrong. I blew accounts when I first started. I did over trading, too much position size, you name it, I did it. And I learned the hard way. And Jim, for all he was showing me what I should be looking at, let me do it. And I asked him about it when we were having dinner one time. He says, "You knew I was going to blow up." He says, "Yeah, I did." He says, "But because of the way you are, I had to let you do it, because the only person who would tell you that you were wrong was you."
Yeah.
You know, because that was kind of the way that I was. And you kind of mellow as you get older. I mean, we're going back 15 odd years. But I learned some very hard lessons, but they were probably the best lessons that I learned, because the biggest one was sit on your hands.
Yeah, we were just talking about that as well, wasn't it? The hardest thing for a trader to do, you know, even you're in a position, you're out of a position, is sometimes the best thing is not to do anything.
It is. And the desire, especially if you see a market starting to move, you think you need to be involved, when really you just need to let the dust settle, see what's going on, then get involved. Now, sitting on your hands for an hour might seem a very long time, but really it's not. You know, if you trade off a 15-minute chart like what I do, it's only 4 closes, and it could go up in one, down on another, back up, and it mightn't actually go anywhere. So really looking at the top of each hour doesn't take as long as you think. But if your fingers are desperate to get involved, you know, you're probably getting in blind.
Yeah. What was that kind of pivotal moment that you saw your trading go from being not profitable, break even, to then starting to see some returns and some good returns? What happened there?
I think it's when I had a massive loss, and it was a huge loss. I did something really stupid. I traded the DAX without a stop loss. Now I'm not a great believer in tight stops, and I'm still not. But at the time, I thought, no problem. This is definitely doing what I think it's going to do. Yeah. Well, it didn't. And I went away for a 3-day break.
Yeah.
And I came back from having a lot of money in the account to having next to nothing in the account.
Wow.
And I just went, oh, I literally can't do this.
Mm-hmm.
There's something fundamentally wrong here. And what I realized what I was doing at that point was I wasn't trading and I wasn't putting my businessman's head on, which I should have done. I was gambling. But that was the biggest trigger that I ever had. And I never made a mistake like that again, because at that point, I wrote down a set of rules and I pinned it to one of my screens. And regardless of what was going on, I followed them rules. And, it was that big kick that made me think, this is it. Because it was like a roller coaster up to that point. You make some good money, you lose some good money. You make some good money, you lose some good money. But when it wiped out, it was a fair amount of money.
Yeah.
I thought, no, this can't be. But also the business at the time, it wasn't doing as well as it should have done. So prior to that, it was, I'll just fund it. It'd be fine.
Yeah.
At that point, it was a case of, this isn't fine anymore. I can't take a risk. And I needed it. I needed that kick. And then through the years, it's actually probably one of the best lessons I've ever learned.
What were some of your rules that you put down? Some of the key rules that have really stuck in your rule book and things that you use today? What kind of rules are they?
It's very, very simple. Less is more. I have that wrote across the top. Less is more. I don't overtrade. And that is it. I am looking for 1-2 good trades a day. And then I'll manage that one trade. And as soon as I've hit my key amount of money, I stop. You know, and it is literally as simple as that. The rules for getting in and one thing and another, they've changed throughout the years, because strategies are one thing you refine. But I have stuck to
the fundamentals.
Less is more. And the way around it is very simple. I just check the charts at the top of each hour. If it's good and I see something ready to go, I'll trade. And as we were just discussing about waiting an hour isn't that long. If it's not ready, I'll wait till the next hour, and so forth and so forth. And eventually, sometime within the 8-hour working day, you will find one trade. And that also, it keeps your win rates up, because I think win rates is quite important to your psyche. But more importantly, scratching all of that keeps your bank account up, because you're not giving it back.
It's a good thing to have, is a positive win rate, of course. What about, do you have the same thing with losses then? So let's say if you have a particular amount of losses in the day, do you say, okay, now I've got to my mental stop out level, I've had two stopped out trades, now I'm going to take the day off and I'm going to just review everything and then come back tomorrow? Or how do you deal about those losses that we all get as a part of the business?
Well, the way I do it, because I'm looking for 1-2 trades at best, I'm either going to win it or I'm going to lose. If I lose that single trade, that was my day complete. I don't sort of, because that's another thing, going back to my younger years. If I lost money, I would revenge trade. Sort of go, the market has hurt me, so I'm going to hurt the market. And it's all about the emotional impact. And really, that's where less is more came from. Because when I go into the market, I'm kind of going in informed. I'm pretty confident of the trade before I take it. But if I lose, then that's it. That's that day finished. And then I'll pick the pieces up again tomorrow. And I kind of keep it to that. And then when it's risk reward, I kind of look at risk reward as 2 separate entities. The stop is how much I'm willing to pay for the trade. So it could be a wide stop for 100, 200. even $500 for whatever it is that you're doing. And then your profit is just what you get out of it. The two of them are completely separate.
Yeah.
And if I'm wrong, then it's just a paid lesson in not what to do. But I'm confident and I'm happy with the loss before I press the trigger. And once I've got a stop in place, it never moves. It only moves in the direction of the trade to either get me out of trouble or lock in profit.
Yeah.
Once it's in, that's it. It's at a point. Now, I do have a wide stop, but halfway to that stop is a little zone that I'll mark on the chart that I have as a thinking stop. In other words, if the market moves to it, I'm going to make a choice as to either I'm going to take some off the table because I'll scale out of a loss.
Yeah.
Because if it turns around, it may pay off what I've just closed out. Or if it does go to full stop, it hasn't cost me as much anyway, or I'll just kill it. I'll just go, I'm wrong, cut my losses, and just be done with it.
So I take it with your position now. I know a lot of new traders, what they do is they would put their whole position size in just one place. Let's say they would go in market, they'd put in, let's say, a lot, and then they would put their take profit, their stop loss. A lot of the more advanced traders, and I see, and I think maybe you do the same, but is break that one lot into lots of smaller position sizes as well. Is that something that you do, or how do you?
I do it every day.
Yeah.
I stage backwards into a position. And what it does, I mean, there's a nickname that the group that I'm a part of they call it Scruffy Madness. Because to them, it is ludicrous. They're going, you're adding into a loss. I'm not. What I'm doing is, if I have a price here and a stop here, I will start with a single position of, say it's £5, but the first position will be £1.
Yeah.
Then I'll add in up to that position. So I'm not fully exposed on the point of entry of the market.
Yeah. And
each time it goes against me, I'm actually buying a better price and reducing risk at the same time. And then if, say, 3 of the orders get triggered, it doesn't go to the full 5. The third one has so much further to go than the first one, it actually gives you extra profit.
Yeah.
And to me, that's
reduces
just
risk as
common
well,
sense, and it is trade management.
Yeah. I think that's a big lesson as well, a big tip for some of the newer traders as well. That's the way to enter into the market, instead of putting that full position in just one place, because most of the time you're not going to get in the exact point that the market's just going to turn around and go up your way. You're normally going to have a little bit of drawdown, and it's going to continue going the opposite way for a little bit and then turn up. So I think that's a really good way to mitigate risk, and also to open a position.
It is. It's just experience, I guess, is the word.
Yeah.
Because initially I used to be like that. 100% in, I'm right. And then Mr. Market says, no, you're not. And then you have to sit on a lot of heat for a very long time.
Yeah.
And then you panic. And when you panic, you make mistakes.
So going into that, I know we spoke earlier, and you showed me kind of your daily, your ritual, or the way that you open up your day. What I would like to do is just you to share the screen and show us kind of your daily and how you run your business, because this is your full-time trader. This is your business, and you treat it like a full-time job. So you've got your own morning set up, and you do everything quite in an interesting way. Do you mind showing us?
No, not at all. Not at all.
Fantastic.
Just open up my screen. Can you see a strange spreadsheet?
A very yellow one. Yeah.
Yeah, it is a bit colourful. I live my life on spreadsheets. Being a business owner, I journal everything. That is something that I would implore anybody watching this: do journal what you do.
Yeah.
More importantly, your mistakes. But what this is, each morning before I go to market, I work out what is essentially a strength sheet. It's the strength of the market, and it is across multiple time frames. put in various numbers. It's based on the waves of the market, a couple of indicators, etc. And it spits out a few numbers. Now, to give you an idea of what I'm looking at today, it's this where I start, and it tells me the CAD is the strongest and the New Zealand is the weakest. Now, compared to the last time that I did this, it looks at the change of strength, and I can see the CAD is gaining and the New Zealand is losing heavily. Now, what that does is it then filters down into pairs that I can look at, which is the market pick. So I will only really concentrate on these. And then I'm looking for a pair. I want a strong against a weak. And it's not necessarily giving me my direction, but it's telling me those are going to move. It breaks it down a bit further for me. It goes on this side. Just use the CAD as the example. So the New Zealand CAD, which is the pair, it automatically tells me which chart to analyze. It's not a particularly fast market. It picks it up from the ATR. So it'll tell me to look at the 4 hour, and it's telling me that the move from the last time frame is slowing down. So if you could see this moving downwards, it could be telling you there's a bounce on the horizon. And that minus 33 is not necessarily it weakening. It could be getting ready to be good value, because think of it like a supermarket. If a product is incredibly cheap, it'll get bought. And that's why strength sometimes it's almost like reverse psychology, but it gives you an overall view of what's happening with that chart before you even go look at it. And it just filters it down for me, because if I was to sit and analyze sort of all 28 major pairs, if you like, I'd be at it all day before I even find something to trade. So this kind of filters that all down for me. And I have a little section down here, which is the majors. So if nothing gets picked out of here that I think is interesting, this particular basket moves every day because it's cable. It's euro, dollar, that sort of thing. And then it'll pick out which ones it thinks is best amongst that lot. So for today, it's telling you it's the euro pound and the euro JPY. And then again, it tells me which is the better chart to look at to analyze. So it's just a big, big filter. And then when I go into sort of my MT5, you guys, if you bear with me, I'll pull it up.
The inputs that you're actually putting in here is when you're looking in your charts, you're mainly looking at the ATR.
I look at the ATR to gauge the chart that I'm going to look at.
Okay.
Because if it's a fast moving market, I want to be zoomed in on, say, an hourly chart, because an hour will give you enough time on a fast market to kind of see what's going on. And then for the entry, I'll drop it into a 15. Sometimes I'll monitor on a 5, but it's mainly the 15. But the idea of the trade will come from the hour. But then you can have slower markets that they just plod along and they're not lighting the world on fire. I don't want to sit and monitor it, sort of micromanage, if you like. So I'll just look at a 4 hour chart and I'll enter it on a 1 hour chart. It just helps me filter everything out. I know it's a strange way of looking at the markets.
No, it's a lot more information than most people have. And from looking at that, I think it can give you those key pairs that you want to focus on, and that's where you get your one or two setups. So you would go through this in the morning, and then from there you would go to your chart on
and then I'll make a choice as to what product that I want to trade, and then I'm going in with a clean bias, not long or short, just clean. All I know from this sheet is it's going to move. And then from there, I'll analyze the chart and I'll work out a bias. Sort of the FTSE, for argument's sake, that's on there. Sat and did it all, worked it out. And for me, it's a buy, or at least it was a buy at the point of when I was going to enter. And it's called a slowing buy because there's not a great deal of speed within it. So all that would tell me is target accordingly.
Yeah.
So instead of going for your 20 pips, I might half it to 10. And it's just little clues like that all the time. And it's homework, I guess is the easiest way. And we're talking lessons earlier on and rules and one thing and another. That is my rule.
Yeah.
Before I even press the button, I spend a long time doing homework. And then it builds confidence for me. Okay.
Amazing. So you go from here, you'd go to...
And then I'll drop into, well, I'll show you. You should be seeing my MT5.
Yeah.
Now, I kind of have this all broken up as well.
Yeah.
I have an alpha watch here, and they're just nicknames I give it so I can remember. And that's a basket of your products that I would look at every day.
Yeah.
So if I've gone through that strength sheet and one of them is in here, I know I'm pretty much good to go because this is my go-to.
Yeah.
Right? But if I can't find anything, this is all I'll be looking at. Okay?
Amazing. Yeah.
So I do that, but for argument's sake, say I like cable. Everybody likes cable. You know, I'll drop it into this screen, and it is all of the pounds together on the same time frame I'm going to trade it off. And what it does is I can look at this and I can immediately see what the pound's doing on every single currency. And I can look to see if there's any correlation. So are they all going in the same direction? And if they are, well, it's adding weight that maybe this is the market to move because it's moving everywhere. And then once I've zoomed in, I'll take it down into a trading chart like this. And I have all of these together as well.
And these different colors, for some people that don't know really about mapping their charts, what are these colors?
I'll
colored lines.
pull it up, I'll show you. If I pull up my daily, it'll look mental.
Yeah.
Right. But what I do is it's high time frame concepts on low time frame entries. Each one of the solid levels is a major turn of the market. And it's going back over the last 12 months to 2 years. And then the dotted lines are major fib levels from the same time period. So I can see what's going on. Now, when you look at it here, it looks mental, but I'm not trading off this chart. This is just giving me an idea of what's going on. Now, if I'm trading off an hourly chart,
it's a lot cleaner.
Suddenly this becomes a lot cleaner because it's zoomed in. And all I'm looking to do is move from one to the next. That is it, you know. And if I'm coming down on the entry chart, which is the 15, now that's a clean chart. So it's high concept sort of, analysis, if you like, entering here. And the one thing that is constant within the markets is support and resistance. And if you can get those right, the rest of it becomes a lot easier. And then what I'm trying to do is I'm trying to pick out the direction of the market. Now, I like to trade from extremes of the market. I'm looking to see if there's been a major overextended move. And if there is there an exhaustion due? And if that is, what is the nearest level to it? That is where I'm going to zone in to look to be my entry. And then from that entry, I have to then start mapping out where do I think I'm wrong? Well, then it comes down to the levels again. You can hide your stops under these levels because we know they're strong. Now, as I said before, working on sort of a principle of two stops, a mental stop and a hard stop. You can see there's a swing. Well, you hide your stops under here because you know it's going to test this swing, possibly this. Your hard stop will be well out of the way, but you've got all of this time to either stage in or get out. And it's kind of, the way that I look at it. And then for the targeting, it works the other way. You're targeting up into the levels. And if you have a broken sort of position, sort of say you're running 5 and 3 of them are going, at one to close here, another one to close there, and another one to close there. As soon as it comes into the first target that's been hit, make certain the other 2 are risk-free, let it get on with it. And it's literally just managing your way through the trades all the time. And
fantastic.
And it's kind of, I mean, case in point, I'll show you a statement if you want, and you can see the hit rate over 200.
Yeah, definitely. If you want to show us one of your fivers accounts.
Have a look, see what we've got.
So with somebody, would you recommend them going into, let's say, when they're opening their charts on a daily level, you would suggest them to find and pick on a daily or monthly level those support resistance?
Indeed. I certainly wouldn't go below 4 hours for support and resistance.
Yeah.
I think once you start looking at sort of your hourly, your 15-minute, your 5-minute for your levels, the way I was explained to me originally, because when we were doing forward purchasing, this is how Jim did explain it to me. Because I asked him that. He turned around and he says, well, they're just paper thin. He says, would you build a house out of paper? I said, no, you wouldn't. He says, the plasterboard is your daily. The breeze block is your weekly, and the bricks are your monthly. And that's how you build a house. This is, if you just had cardboard in there, which is your hourly, it wouldn't last long and you'd break it. And it was literally that. So monthly, weekly, daily, 4 hour at a push, and then that's it. You're locked in stone. And then from there, as you've seen, you can then condense it down onto an hour. And it sounds miles away having a daily level.
They get there very fast.
Properly, they're perfect.
Yeah.
You know,
price gets back to those levels quite fast.
You'd be surprised. The only downside to it is you have to develop quite a lot of patience.
Yeah.
But because I'm only looking for 1-2 trades a day, I've learned that patience.
Yeah.
And I would rather sort of be a sniper and take one shot than have a shotgun.
Yeah.
And just, well, it's that
disperse
really.
Disperse all of the different positions on the market.
It is. And I mean, just kind of back it up. I mean,
so this is one of your 40K.
This is the new one.
So you've got
building this up to sort of show you that it can be doubled.
Yeah.
It's recently passed. I don't know if you can see, it's ready for a profit payout.
Yeah.
Progression. It's only 9 days old, this one.
Yeah.
So it didn't take long. And the other one that I'll show you, because it's ready for a payout as well. Or at least it will do when I work this machine, is this one. This is the bigger of the two that I've just shown. But this is to give you an idea. This is 305 trades, 90% hit rate. And the part that I keep an eye on these is the profit. The profit factor, because it shows it's sustainable and it's keeping me in check. And then obviously you've got all your deal tickets underneath. It's a very, very simple process. And this one's been running quite a while. As you can see, 300 trades. But the reason that its hit rate is high is simply because I do my homework before I go to market.
Yeah.
And it's literally that simple. If I have an inkling that I'm wrong, I'll just wait. And if I miss the train, I miss the train. There'll always be another one tomorrow. And that is the way I go. And
you're slowly building up, obviously, with the Fivers accounts. We have quite a vast growth program. So when you get 10% on this account, you'd be doubling your account each
indeed
time.
And that's the whole idea. I mean, I mean, 5% is for me is an odd one, really, because I never wanted to be involved. I really didn't. I was never I don't go for the Lambo boys and all of this flashness. I do run a YouTube channel, but I run it for pleasure.
Yeah.
And within it, there's sort of a few followers, and I talk to them. And there was a couple of guys who saying, "Oh, I want to do a prop fund." And I'm like, why would you pay somebody to trade? You know, just put your money in a broker and build it up. It can be done. I've done it, and I've shown you how to do it. They go, no, these guys. And I'm like, who are they? And anyway, within the group that I was involved with, they all wanted to try it.
Yeah.
And I thought, oh, okay, guys, well, because you're listening to what I'm trying to say, it's only fair I check them out and I'll trade it with you. And I went in kind of not expecting much.
Yeah.
And I know that sounded awful, but once I spoke with Toma, to be honest, great guy, absolute great
head of
guy.
marketing.
Yeah. And he kindly sent me the T's and C's because, like I say, coming from a business background, I do read the nitty gritty of things. I'm that way inclined. I thought, oh, okay. And I traded it up past the program, as you can see.
Yeah.
And I wanted to show the guys in real time that it can be done. But then as I started working with the 5%ers, I thought, do you know something? This is actually a very cheap way into market with a backup behind it. And if anybody's considering doing a prop fund, I'd put my name to this.
Yeah.
And it's the only one I will, because I've been approached by other companies and I always turn them down.
Yeah.
Because with here, you kind of, as long as you stick within the rules of risk, etc., which I think you should anyway.
Yeah.
And let's be honest, that's just common sense. You can do what you like, which means you are free to be a trader. Whereas with some of the other programs, you're almost pushed into being a gambler.
Yeah.
Because the limits are too tight. You know, the fact that you do 184 days to pass the end of 6 months.
Yeah.
Take your time, grind at it, learn your craft. And then at the end of it, well, as you say, there was a profit payout ready on that account.
Yeah.
If you're doing this around a day job, those profits every month, if you just cash out once a month, it can give you a good treat at the end of it.
I think people don't realize at the start of their journey in trading, it's really all about learning how you are as a trader, learning the way you are, the way that you approach the market. And by the time that you are profitable and you can trade and you can make profits, doing a program like the Fivers where you have growth at every 10%, we double your account funding. The sky is really the limit for people that want to do this as a career or want to do this for a livelihood. So, but that does take me on to your group, because the group that you're referring to, isn't it? That's your group where you have your traders and you help traders. The Scruffy on your t-shirt, isn't it? The Scruffy trader. Yeah, the Scruffy.
Yes, I try not to promote it that much because basically I'm just a guy doing a job.
Yeah.
And YouTube for me was a hobby because, as we were saying earlier on, what do you do when you're waiting? Well, I have more toys on my desk than what's in a toy shop.
Yeah.
You know, they're everywhere. There's a little clue as to what I might like.
Yeah.
You know, because I am an aging child.
Yeah.
And funny enough, that is what my old business was. I used to import plastic injection molds, you know, model kits and collectibles, that sort of thing. And that's, well, I'm just a child, really.
Yeah.
And because I was getting followed time and time again, a little community was built around the YouTube channel, which became the Scruffy Squad, as it's kind of fondly nicknamed.
Yeah.
And within it, it's just a community of like-minded guys. There's no magic pills or anything like that, but I talk to them every single day. I live stream with them. I show them exactly what I do. because trading is a job, it's a business. And there's no magic pill. So there's not a system out there that says, right, when this X hits there and that X hits there, you go in and all of this. It's not. It's about being able to read a chart and understand what the markets are trying to achieve on the given day or the given time frame. And I try to express that with the guys. And I've seen them come on leaps and bounds once they start to understand that kind of concept of trading rather than buying an off-the-shelf course, if you like.
Yeah.
I've spent a fortune on these things, and ultimately, simple is best.
Yeah.
You know, do your homework, zone in on a market that's moving, that you can understand why it's moving, and then just manage it.
What would be then your tips for a brand new trader that is got a little bit of time experience under their belt, and now they want to go and they want to get funded. They want to get funded by a prop firm, and they want to take the evaluation. What would be your biggest tip, or what would be your bunch of tips that can help them?
Well, the first one is it's a marathon, not a sprint. Just take your time. You know, you don't have to pass this in a week. You know, break it down to its smallest component. You know, even if it's just for $7 a day across the 6 months.
Yeah.
And work along those lines. Because if you do 14 quid a day, you've knocked a day off the end. And build it slowly. And then if you go with the 5%ers, one of the ways that I did this was I didn't look at the major balance as my pot. That was my leverage. And the drawdown was my pot. So I controlled the position size. And so again, reverse psychology. The drawdown is your pot, the balance is your leverage, and then just keep your position sizes small and take your time.
Amazing. Fantastic. Well, thank you very much for taking the time to speak with us. I wish you to continue your success with us. Can't wait for you to continue up the funding levels. Fantastic. Thanks, Gary.
No, you're more than welcome. Pleasure to meet you.
Take care.
Take care. All the best.